Hello, dividend executives. Welcome back. The stock market is open, so you already know we are buying stocks and we are adding assets to the portfolio. If you are new here, I am building a dividend-only portfolio where I focus mostly on monthly dividends and then a little bit of quarterly dividends as well. And my goal is to get to $250 a month in pure passive dividend income. We are close, so let's go over it. For the week, we're pretty flat. We're up $180 or 1.12%. And not too bad, but for the day, we are down 0.77% or $127. So a little bit of a pullback today. We had some FOMC statement come out today, move the market a little bit, and then we have some massive earnings coming up, which is also keeping the market on edge. So let's go over dividends. We didn't have a whole lot come in. Everything is pretty much the same as last week. Our last dividend payment was on February 20th. And that was the YMAX fund. This is a new fund we are trying. We put just a tiny bit of capital into it. We got paid 53 cents a share. We can go over that one in a little bit. And then the one before that was PSEC, of course, on February 20th as well. So $2.52 there. Fun to see that one just slowly inch up each and every single week. And we have some stocks we want to buy today as well. So this was a month. This was the entire month right here. So far, we should break the $200 mark this month, no problem, starting with JEPI every single month. And slowly but surely, all these dividends are either climbing or hovering around the same, depending on what type of fund it is. So that's what we have. We have our first dividend coming in on ExxonMobil for 74 cents. This stock's actually been doing really well. We only have a tiny bit. We only have 0.77 shares, but still the momentum is there. And we love to see that. That's a quarterly dividend payer as well. And then this one, we're actually probably up big time. We bought this at 97 and now it is 104. So we're up technically 7% on that position, but a very small position in the portfolio. So let's take a look at it. Let's buy some stocks together. We have some buying power available. We did make some option plays as well. We can review those real quick. We got to sign some TSLL a while ago. So we're just selling some nice conservative 0.1 delta or above puts. Or calls on my shares until it comes back. Doesn't seem like a whole lot, but as you can see here, we got paid $16. So we got paid $16. These are probably going to expire worthless. TSLL is trading at $9.57, so we should be good on Friday. But really, that's like it's not too bad. So $16, and again, it expires on Friday, and it'll be some nice income. So we're 50% of the way there. Just a couple more days and this will theta decay away, and we should get the full $16 if we let it expire worthless. If not, we can roll the position on Friday to the following Friday and see if we can pick up a little more premium there. But all in all, on the TSLLs, if I can collect, even 30, 50 bucks a month, still adds to our dividend portfolio, and it adds to the total income the portfolio is bringing in and helps just pad what we got going on. We also sold some later long-dated Mara puts. Mara's currently trading at $23. We sold the 14.5, so it would have to correct massively. And we sold this way out till March 8th, right? And we got paid a premium of $33. We got that instantly to our buying power. So those are the two option plays that we have open right now. Some on some of the shares we own, some on a little bit of the cash that we had on hand in the brokerage account. So that's what we're looking as of right there. And I'm ready to buy some stocks. So as always, we are going to buy some of our long terms, and then we're also going to buy some of our dividends, right? So we're going to start it off with Stag. We have 9.72 shares, currently sitting at $373 of the portfolio, or 1.78% of the portfolio diversity. And we are up 12, almost 13% on this position. So we're going to add a little bit to that. And per usual, we are going to be buying our regular $25 worth of this stock. It's going to buy us 0.65 shares. And the upcoming dividend, ex-dividend date is February 28th. So if you want to get paid for the month of March, make sure you purchase some shares before February 28th. And it looks like right now the prediction is 12 cents a share. The last dividend that we received on this one was 12.33 cents. So it's pretty much similar every single month, 12.25. Looks like it just ticks up a little bit, 12.25 so not too much, but still, you can see it slowly coming in, $1.18, $1.18, $1.20, and we're going to increase it a little bit more right there. So we haven't bought this one for a while. I wanted to give it a little bit of love, and a small percentage of the portfolio, under 2%, but we're going to continue to add to it. So that's Stag. Next one on the list is VYM. Been really trying to raise my position on this one as well. 2% of the portfolio, 435. This is one of the fairly newer funds to the account. And we are up 2.21%. But yes, of course, I'm adding another 25 today, buying us only 0.2 shares, and it adds to our dividends just like that. So we have over 4 shares now, which is nice to see. And this is a quarterly dividend payer. We do have our first, did they declare it? Yeah, I was going to say, we do have our first dividend that'll be coming in. It'll be pretty hefty. Let's see if we got any before. Nope. Yeah. So no dividends on this one yet. Our first one will be coming in next month. So we will see what that comes in at. As of right now, it is estimating that the dividend will be $1.10. And so if that is true, we're going to be getting, around $4.50 or $4.40 of dividends just on this one alone, which would be nice. And the ex-dividend date on that one is March 17th. So plenty of time to buy VYM some more before the ex-dividend date. Next on the list, I want to jump into PSEC. We have not been buying very much of this. This really is not that great of a performer overall. Down 11% the last 5 years. All time down 61%. Really not a great stock for that. But it does pay a nice little dividend. Small percentage of the portfolio. 1.18% of the portfolio. And let's take a look. You can see we haven't bought this for a while. But you can see the dividends are just slowly dripping up, right? So every month, I shouldn't say we haven't bought it. Our portfolio has bought it for us because we reinvest our dividends, but we haven't gone out and purchased any shares lately. But you can see what the dividend yields are doing here. $2.45 to $2.47 to $2.50 to $2.52. And that exactly right there is the dividend snowball, right? I'm doing nothing. My shares are going out and buying me more shares every single month with the money that they pay me in dividends, and then I get paid more the next month. So pretty cool. We're going to add to this a little bit. $25 is going to go a long way on this stock. So we're going to add 4.3 shares, and that'll increase our dividends. I think it's usually around 6 cents, I want to say. Yeah, 6 cents. So just like that, we had 36 cents or 24 cents right to the portfolio. When the next dividend comes in, it'll be closer to that $3 mark rather than to the $2.50 mark, or $2.75, I should say. But just like that, add a little bit more income right off the rip, and the snowball gets a little bit bigger. And then the last one is another monthly. It is going to be on one of my newer funds as well, and that is going to be on QQQY. I think so. Yeah, this is a Defiance 100 NASDAQ 100 Enhanced Option Income ETF. This one's a fairly new fund. It started out in $20 a share. Hasn't been doing fantastic, even though QQQ's been doing fantastic. But that being said, it does pay a nice little dividend. We only have 1% of the portfolio on this one, so super small percentage, only $200, and we're down 5%. But we're down $12, but you have to come down here and you got to look at the dividends, right? So if we go into the dividends on this one, we obviously have got more than $12 worth of dividends. So that's one thing to keep in mind when we could be down on the fund, but if we're up more on the dividends overall, then potentially it's worth it. Again, a small percentage of my money, but I want to add to this a little bit. Dollar cost average down a little bit. And it's looking like the next dividend is 85 cents as well. The ex-dividend date is on March 7th, so plenty of time there. But I just want to add to this one a little bit. I'd like to get this over. If we can get this to $1 share, that'd be pretty sweet. So we have a long ways to go there with the $16, but we're about half of the way there. So we're going to buy a little bit here, 25. That should buy us more than a share, 1.47 shares. It will raise it a tiny bit in the portfolio, but overall, not too bad. So we're down 5% on this position. We got some nice dividends coming in. Hopefully we can get closer to that $10 mark, $10 a month mark, and then we'll slowly inch our way up to buying ourselves a full share each and every single month off trip. So that is the update for this week. We are just buying assets like we do each and every single week. We keep it super, super simple, and we just continue to buy assets. I'm going to continue to watch a couple of my other funds. We might, and we've talked about it before, we might be doing a little bit of consolidation to make things a little bit cleaner. And I might be dropping some of these yield max funds. Overall, some of them are up, some of them are down. You can see this TSLY is absolutely getting hammered, and Tesla's also getting hammered. So that makes sense. But I might want to consolidate some of these, especially stuff like GOY, FBY. I'll probably keep SQY going into the bull run, but some of those, AMZY, APLY, I want to consolidate some of those, and that is why I'm trying this YMAX fund, just because I want to see if that's maybe a better alternative. The YieldMax team came out with a fund that they are trying to put everything into one, And I want to see how this goes, but my intentions for this would just be to consolidate like about 5 or 6 funds all into one fund, and then hopefully get a similar dividend. So we're going to keep an eye on that. We might do more into the YMAX, but if not, as always, we're just going to be adding to our main backbones of the account, and that is SHD, VTI, JEPI, JEPQ, and VYM, right? These top ones on the list are top on the list for a reason. They're the ones I want to put the most money into. If we went to our total equity, we have 3,600 in SHD, 1,600 in VTI, 1,000, just over 1,000 in JEPI, 1,300 in JEPQ, and then 460 in VYM. So it's nice to see those totals continue to tick up. Again, we just added to VYM today, and we're going to continue to add to that. And I want to balance this out a little bit more. I want to get a little bit more in VYM, a little bit more in JEPI, and a little bit more in VTI. I would love to get the VTI to the $2,000 mark. And we're just going to continue doing that each and every single week. The account's at $16,300. Crazy to think that a year ago this was at $0, but it'll be cool to see what it's at in a year from now. So that is the update for this week. Every single week we buy more assets, and we report back here, and we grow our wealth together. So thank you everybody for tuning in. As always, I appreciate the support. I appreciate everybody that likes the video. I appreciate everybody that watches the videos, and keeps me motivated. So thanks everybody. We'll catch you next week. Happy investing.